I'm going to use this video to talk about question 36 of chapter 17, requirement A. This requirement asking for the statement of activities and statement of net position for governmental activities of this city of Bernard. And to prepare these two financial statements, we need to kind of complete the whole accounting cycle, starting with journal entries and then prepare T account and then trial balance, so that we can have the government-wide financial statement prepared. So do remember, this is for government-wide financial statement, which means that we are going to follow accrual accounting. Okay, so let's go directly to the tables we have. So in this table, we are providing a lot of information related to the cash receipts and cash payments. Okay, cash receipts here are mainly from their revenues or from the borrowings. As to the payment, most of them are the payment to cover the expenses. Alright, so first let's have a look at the receipts and see what's going to be the journal entry for them. Under receipts, we have receipts from property tax, sales tax, dividend income, charges for general government service, charges for public safety service, charges for public workers, charges for health and sanitation service, charges for landfill. Okay, so I'm going to put them together and kind of consider them as one category, as the different type of revenues. Okay, so then I prepared the first journal entry here. In this journal entry, I debit the cash and credit revenues from property tax, revenues from sales tax, revenues from dividend, and revenue from the charges for services, and then the last one is revenue from the grant. They're all coming from here. Property tax receipt is 510,000, sales tax 99,000, dividend 20,000. As to the revenue from charges for service, I combine those charges from service together. In total, it is 66,000, and last one is the revenue from grant, 25,000, and the total cash from those revenue is 720,000. And second journal entry is related to the borrowing. They issued the notes payable, 200,000, and they sold their investment for 84,000. So the journal entry for this is to debit cash and credit notes payable, credit investment, and then credit gain on investment. So the investment itself is 70,000 is original balance on the book. So if we go back to have a look at the information here. So for the city of Bernard starts the year of 2017 with the following unrestricted amount in its general fund: cash 20,000 and investment of 70,000, which means that investment have 70,000 beginning balance, and then they sold it at 84,000, which means that sell it at a higher price. So for this appreciation, that is the gain on investment, 14,000. The total is 84,000. The total cash from this two transactions is 284,000, 20,000 from notes payable, and then 84,000 from the proceeds of the investment. And then the last one is related to this receivables at year end. The total gross receivable is 130,000, because they consider 10,000 is not acceptable, collectible, which means that the net amount of receivables is 120,000, equal to 130,000 minus 10,000, that's 120. So journal entry is to debit property tax receivable and then credit property tax revenue, 120,000. Alright, so that's all the journal entries related to the cash receipts. And then next, let's move on to those payment. So here under payment, we have the payment to the salaries, to utilities, to insurance, and to miscellaneous. And all those payments kind of related to four functions of this city. One is general government, the second one is public safety, third one public works, and the fourth one is health and sanitation. So what I'm going to do is that I'm going to kind of calculate what's going to be the total amount related to salary, utility, insurance, and miscellaneous, and put them into like one expense account for each function. So for example, the journal entry I prepared here is like this. So I debit expense. For general government, I use GG to stand for general government, PS to stand for public safety, PW stand for public works, and then HS stand for health and sanitation. So total expense for general government is 136,000. Total expense for public safety is 132,000. Total expense for public workers 97,000, and total expense for health and sanitation 37,000. The total cash paid for those expenses is 402,000. So how did I get this 136 for general government? So what I did, I used 90,000 of general government salary plus 9,000 utility for general government, and plus 25,000 of insurance, and then plus 12,000 of miscellaneous general government expense. Add them together, I get 136,000. So I did the same for public safety, public workers, works, and health and sanitation as well. So which means that the numbers in this journal entry for those expenses are the kind of a subtotal. Alright, then let's move on to other expenses. And the first one, kind of in another table, is related to the payment for the debt. So there are payment for the principal of the debt, and then payment to the interest on the debt. So payment on the principal is 10,000. So the journal entry is I debit notes payable 10,000, and then debit interest expense 42,000. So the 42,000 interest expense include interest on the previous debt and the interest on the new debt. In total, that's 42,000. So total cash paid for the debt is 52,000, including the principal and the interest. Alright, and then let's move on. There's a building they purchased for public workers. The total payment is 210, and then there's payment for the equipment 90,000 for public safety. The journal entry is to debit the building, equipment, and then credit cash. The total cash paid for these two kept assets is 300,000. And next one is the public works supplies. The total payment is 20,000, but they have 30% still held. And then we're going to have like two journal entries to take care of those supplies. The first to recognize the initial payment of all the supplies, 20,000. So we debit supplies, credit cash, 20,000. So this is like the beginning balance of supplies. And then at the end of the year, they still have 30% left, which means that they used 70%. So for that 70% used, we recognize it as supplies expense. So debit supplies expense and credit supplies. So this 14,000 is 70% supply that's used during the period. So it equal to 70% times 20,000, which is 14,000. Okay, so next one are the orders, ordered but not received equipment and supplies. So because this is for government-wide financial statement, which means that we do not, we don't have entry for those purchase order or outstanding purchase order. They will be recognized on the book until when it's delivered. Okay, and then due at the year, there's salaries, which means that those are the unpaid salaries, and then we need to record them as the salaries payable. At the same time, we debit expense. So we debit salary expense for general government 14,000, and the expense of salary expense for public safety and salary expense for public workers, and in total that is 36,000 salaries payable. Alright, so that's all the journal entries related to this table, the information in the table, and then we can move on. There are also a few transactions or other information related to the city. On the last day of the year, city borrowed 64,000 from local bank and used that money to buy a truck. The first payment on the loan will be made at the end of the next year. So here, for the city got a track by borrowing money, and kind of no cash involved directly, so we debit track. So this is what they purchased, but they borrowed from banks, so credit notes. Okay, it should be notes payable. So that's notes payable. Next one, the city started landfill, and the closure cost would be 260,000. Right now it's 15% filled, and the city has incurred no cost to date. Okay, so this is the long-term liabilities, and journal entry is to debit the landfill closure expense. 39,000 credit landfill closure liabilities. So 39,000 equals to 15% of the 290,000 total closure cost. Okay, next one. For the equipment and supply that has been ordered but not received, the city council has voted to honor the commitment when the item was already received. There's no entry required for this transaction. And next one, for the new building, the new building is being depreciated over 20 years using straight line method, no salvage value. While depreciation of the equipment is similar, except that its life is only 10 years. Okay, so here, which means that we need to recognize two depreciation expense. First one, for the equipment, we debit depreciation expense for equipment 30,000 and credit accumulated depreciation 30,000. That's 10% of the total 300,000 original cost of the equipment. While for the buildings, we debit depreciation expense for building and then credit accumulated depreciation for buildings, which is 10% of the original purchase cost of the building. That's 210,000. All right, so the last one is the investment. The investment are valued at 110,000. So based on its original cost of 111,000, which means that the value of the investment increased by 5,000. That will be recognized as an unrealized gain on investment 5,000. All right, so then I'm going to use next video to give you the statement itself. Let me continue question 36, requirement A of chapter 17. First, let me correct some of the journal entries I prepared in the last video. It's related to the depreciation expense. So for the depreciation expense, and there is going to be two depreciation related to two buildings. One is for the old building. On this book, the old building has a historical cost of 300,000. It's going to depreciate over 10 years. So each year it's going to be 30,000 depreciation expense for the old building. And then there's the new building. So new building's total cost is let me see. So total cost of the new building is 210,000, and this building is going to be depreciated over 20 years. So each year the depreciation expense will be 10,500. And last journal entry is for the last depreciation is for the equipment, and for this equipment the total depreciation expense is the historic cost of the equipment is 90,000, and we're going to depreciate that 90,000 over how much? Over 10 years. So each year the depreciation expense would be 9,000. Okay, so that's some corrections related to the depreciation expense. Next, I'm going to skip the T account and the trial balance and go directly to give you the solutions for the statement. The statement of activities and statement of net position for governmental activities. So first, let's have a look at the statement of activities. Because they only have the governmental activities, so we may make this statement a little bit easier to read. So this is what the statement looks like. So under the functions, we'll have governmental activities, and this government have like first it has 4 functions: general government, public safety, public works, health, sanitation, and also there are some expenses related to the debt. Okay, and then for each function, we have the total expense, also have the revenue coming from the charges for service. Okay, as to the charges for service, they're all the numbers is kind of given directly in our cash receipts. Well, for the expense part, it's a little bit complicated. You have to calculate what's going to be the subtotal for each function. For example, for general government, when we prepare the expenses, so we have like this expense for general government have 136,000. That's one subtotal related to include salaries, utilities, insurance, and miscellaneous. However, there are some other expenses related to general government as well. For example, they will have this additional salary expense for the general government. Okay, and then for other functions, for example, the depreciation expense, this building is for public works. Then the depreciation expense for this building should be included as the part of expense of the public work. And for this equipment, because this is for public safety, then the depreciation expense for this equipment will be included as the expense of the public safety. Okay, so then that's kind of how we get the total expense for each function. And the service charges are kind of coming from here, this part. Okay, they're all here and shouldn't be that hard to get. Okay, and don't forget this general revenues, that including the revenue from property tax, sales tax, dividend, and some gain on the investment. So then for the government activities, we are going to get the total change net position that equals to 282,500, and the plus beginning balance, we can get ending balance of the net position. Okay, so that's the first statement. Then the second statement is a statement of net position. In this statement, it's like balance sheet. We have assets, liabilities, and then net positions. Okay, so one thing you have to we can compare is that we can compare the total net position here with the amount over here in the statement of activities. These two numbers should agree. And another thing is under net positions, we have an item called investment in capital assets net of related debt. So how we get this number? So this actually we use the total net amount of its capital asset minus all the debt related to those capital assets. So for example, what we did is that we include the total building, net amount of building plus this is the old building and plus the new building and then plus equipment and then plus the truck. So that's the total amount of the net capital asset. Net means the net of depreciation, and then minus this total amount of long-term notes payable. So just assume that those long-term notes payable are related to the purchase of those capital assets, and then we get this balance 154,500. So that's how we get this balance over here. And as to the other part, it's very similar to balance sheet. We have assets, liabilities, and under asset we have current asset and long-term asset, and then under liabilities we have current liabilities and non-current liabilities like note payable. And as to the net positions, so besides investment in capital assets net of related debt, we have 3,000. This is related to the grant that they can now use directly, and then anything left goes to the unrestricted net position. So it's actually equal to the total net position minus the amount in the capital asset and then minus the restricted amount. In this video, I'm going to talk about the requirement B of question 36. First, let's prepare journal entries for fund-based financial statement. Okay, so this is a fund-based financial statement, and then I'm going to highlight what's going to be the difference in those journal entries when we compare when we compare with the journal entry for government-wide. So for those cash receipts related to the revenues, the account we use are the same as government-wide financial statement. We debit cash and then credit revenue from property tax, from sales tax, from dividend, from surveys, and from grant. And then we are going to have cash from long-term note. So difference here is that instead of credit note payable, we credit other financing sources note. We debit cash and credit other financing sources note, and then credit investment and credit gain on investment. And for the investment, gain on investment is the same as government-wide financial statement. Okay, and next one is the property tax receivable, and the journal entry here is the same as government-wide. So next, let's move on to the cash payment. So for cash payment, the main difference here is instead of use expense, here we need to use expenditures. Okay, so make sure that we use expenditures to replace expense for those cash payment. As to the balance here, the amount we recognize are the same as we did for government-wide. So for example, for general government, 136,000 equal to the cash payment for salary, for utilities, for insurance, and for the miscellaneous. So that gives us 136,000. We do the same calculation for other functions. Next, let's move on to one note here. So for public workers, the 6,000 prepaid expense, they are all included. They are all prepaid at the end of the year, which means that we need to create this prepaid insurance balance for their balance sheet. At the same time, for this remaining prepaid insurance, we credit fund balance non-spendable. Okay, so this is another different part. Next is related to the payment for the debt. So for the principal and for the interest, we all use expenditures. So we debit expenditures, principal, and expenditures interest. And then for the purchase of long-term asset, we also use expenditures. We debit expenditures building and expenditures equipment, which means that those long-term assets are not going to be recognized on the balance sheet. And the next one is for the supplies. So in total, they purchased 20,000 supplies. So what we did is first we recognized all of them as expenditures, and then at the end of the year, because they have 30% left, 30% of 20,000 is 3,000. So we are going to create supplies account balance on balance sheet, and then for the remaining supplies, they go to fund balance, non-spendable fund balance. So this part, the supplies, is the same as what we did for the prepaid insurance part. So which means that any fund balance related to these two accounts that are not spendable because they have been spent on these two assets. Okay, next one is the purchase of investment. It's the same as government-wide financial statement. And then for the order but not received. So for this outstanding purchase order, the government need to create the temporary account, the encumbrance. But because they're temporary accounts, so we can also need to reverse them, and which means to cancel their balance at the end of period. So just skip that here. And the last one is for the unpaid salary. So for them, we debit expenditures and then credit salaries payable. Alright, so that's the journal entry related to this table. And then let's move on to the additional information. The first is the purchase of check with the bank loan. So journal entry is debit expenditure for the check and then credit other financing sources, bank loan. Next one is for the landfill. Because landfill is a long-term liability, which means that we do not need, there's no entry required for this long-term liability. So we skip that. And then for the next one is for equipment supplies. They are the owner commitment. There's no journal entry. as well. And then for the buildings, because all the buildings, all those capital asset has been recognized as expenditures, which means that depreciation expense is not required. And the last one is investment. So investment value increase, so we debit investment and credit unrealized gain. So this is the same as government-wide financial statement. Okay, and then let's move on to have a look at the statement. So first is the statement of revenue, expenditures, and other changes in fund balance. So I skip the T account and trial balance, and which you can do it by yourself. And after prepare the trial balance, then you can get a balance for those different revenues, expenditures, and other financing sources. Okay, so after we prepare the statement of revenue, expenditure, and other changes in fund balance, we can move on to prepare the balance sheet. So on the balance sheet, we have assets and liabilities and fund balance. So just remember that in the fund balance sheet, there's no capital asset and there's no long-term liabilities.